Big shout out to everyone who has subscribed to the channel. We're about to hit that 10k subscriber mark. If you are new here, don't forget to hit that subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. Don't forget to leave a like for the YouTube algorithm. Also leave a comment. As soon as we hit that 10k mark, we are going to start having live streaming sessions, so do stay tuned. Hi guys, welcome back. We're back with another video, and in today's video we're going to look at ways in which you can actually use to increase your probability when trading, right? So a lot of people do trade BTMM, and a lot of people are learning smart money concepts, right? So, or even supply and demand trading, right? So I get a lot of questions from you guys, so I decided to do this video to show you how you can actually decrease your risk when trading, because that's the most important thing, your risk to reward, right? So you need to understand the type of setups that you need to wait for, right? And also understand the risk before you execute, right? So I feel like a lot of traders, and I've actually seen a lot of traders, they do not really focus on the risk. They just focus on taking any trade and over leveraging, right? And not really understanding that not every trade is going to work out, right? That's something you actually have to accept, right? Before you click buy or sell, you need to understand that there is no 100%, right? But you always want to be right on the right side if you actually manage your risk and have a good risk to reward ratio. All right, so the first thing that we're looking at here, as you can see in this scenario, we've got a high low, and then price break structure, right? So we get a break of structure, right? So that's number one, right? Wait for a break of structure. And then number two, we want to wait for a move back to the order block that has caused the break of structure. So the zone responsible for the break of structure, and where we can identify a bank move, right? Where we can identify momentum, right? At a zone where you see candles, right? You can identify imbalance, right? We wait for a move back, we wait for a retracement back to this area, right? Or we wait for the price approach back to this area, whatever you want to call it. All right, so as price gets to this zone, a risky entry would be waiting for number three. One would wait for candlestick confirmation. All right, in this case we have a nameable pattern. This is actually this is actually wrong, guys. I made a mistake there, right? But this is supposed to be the red. Let me just fix that. Sorry about that, guys. There we go. Okay, so this is actually a bullish engulfing. That's a nameable pattern, something you'd want to see at a zone, right? So in this case, you'd have your stop loss just below that, and you'd want to see this go to the upside. Right now, this is very risky, right? This is very risky. Why? Because sometimes what might happen after seeing this this candlestick pattern, right, you might just see the market move up and then it drops on you, right? Why? Because technically, as we can see, if you look at the structure, right, it is a downtrend, right? If you look at the structure, it is still a downtrend, right? So it's very risky, right? It's very risky. So after seeing this, one would want to execute, right? So that's number four, right? So now, to make it easier for yourself, right, the most important thing that you need to keep an eye on, all right, for a confirmed entry, right? For a confirmed entry, same thing, break of structure. So we see a break of structure, right? We look at the zone responsible for the break of structure, an area where we can identify the imbalance, right? We wait for the move back to the OB order block that has caused the break of structure. So we want to see the price approach, right? We want to see price getting back to that area, price returning to that area, right? This is very good, right? Because as you can see, number one, price is actually coming back to a fresh zone, right? Price has broken structure, right? Price is actually coming back to a fresh zone, and as price is pushing down, as you can see, right, price is pushing down, price gets to the area, right? We are still in a downtrend, but what makes this a high probability trade or a setup that you can look for is we get price reacting to the order block, right? We get price reacting to the order block, changing the character, because this is now a change of character, because as you can see, we are moving down, right? We are in a small little down phase, right, within that structure, right? So once we see this, then we can actually use this fresh order block, right, for an entry, right? So this one is more confirmed because as you can see, it's in line, right, with your trade idea, right? It's in line with your trade idea, and you can actually enter this with confidence, right? So even if we look at this from the BTMM points of view, this is a very good example that I've actually seen here, right? I mean, the normal BTMM pattern that we like seeing, right, after Asian session is a trap move above the Asian range, right? The range, it has to be within the 50 pip mark, right? So that's range, right? That stop hunt range has to be 50 pips, right? 50 pips. So as you can see, price actually lands in that stop hunt box, right? And then the first thing that we see is bearish engulfing candle. All right, so after that, as you can see, you can actually execute, right, just below that, right? As you can see, if you look at this, this is actually a supply zone where price went to. So someone would actually execute that, right? But what I'm saying here, what I'm trying to show you, that it's actually better for you, right, to see such. It's better for you to see, this. As you can see, price is moving up. We start seeing these breaks of structures, change of characters, all right? We start seeing these change of characters, and as you can see, price actually moves back to the order block, right? After changing the character, price moves back to the order block, all right? And then we see a very clean move away from that, right? So from a clean chart, when price moved back to the order block, right, actually there we actually had a nameable pattern, bearish engulfing, right? That's our decision point type 1. Right, so I mean, you had the opportunity to actually risk like 12 pips, right? 12 pips, and then right now you would be floating, 110 pips, right? So 110 pips, right? So these are the type of trades that you need to start mastering, guys, right? These are the types of trades that you need to start mastering when trading these M's and W's, right? You also need to understand your timing, right? Remember, these are elements that we need to put together, right, for us to increase our probability and have more confluence, right? So that's very, very important. So we also have another example here, right? This is something very interesting. If you look at this from the H1 or H4, this is what we see. If you look at it from the daily, actually, I think daily would be good, right? You can see this zone, right, where price was playing around. That zone right there, right? As you can see, that was a good key level, right? That was a good key level from the daily time frame. So looking at it, we can see that price went to the area. And what I like about this is, remember, we always trade away from the peak. So we actually had a peak formation, which we can confirm, right, using our TDI. This is what we had with price, right, playing around that extreme point, right? And we had a nice pattern there, right, on TDI also. So we had the first day of drop. Remember, after that, we want to see a move back, on the market baseline or an interaction. This is what we had, right? But if you can look at this, we actually had a 1350 crossover. So that confirmed the lock of that peak right there. And we had a nameable pattern, a nice M formation, right, in line with the direction, in line with the peak, right, away from the peak actually. All right, away from the peak. So this is what we had, 5200 crossover in the M15, and we had a nice trade, right? We had price playing around that area, right? Price playing around that area, as you can see. If you look at this from a clean chart, guys, let's go to the M15. This is what we actually have, right? We actually have a nice area there. I think looking at it from the higher time frame, right, you can see where price was actually getting back to. Right, you can see where price was actually getting back to, right? A very key level, a very good key level right there. So looking at it from the M15, this is what we have, right? So price gave us that area, right? You can see liquidity right there. You can see price breaks the structure, all right, and then price returns to the order block. So instead of just executing, right, after getting whatever candlestick confirmations that you wait for, right, instead of just executing, it's better for you to wait for a change in character, right? Change of character. It's better for you to wait for that, right, and then execute from these extreme points, as you also understand the manipulation, right? So as you can see, this was just a nice move back to the order block, but when you look at it with our template, all right, we can see that, oh, this was actually a multi-day M formation, very clean multi-day M formation, right? And this actually happened at the right time, right? Asian session was 28 pips for that day, the range, right? And then we had a trap move above to hit the stops, right? 22 pip stop hunt right above, and you can see the reaction that day, right? And you can see, 1, 2, 3, you always find it in there. And then we trade away from the peak, right? So you actually need to go and back test this, guys. You actually need to go and back test this, but it's always good for you to wait for such entries. Always good to wait for such confirmed entries. Now on the risky entry, sometimes what you can do is you might get a sniper trade, right? That's one of the advantages, but it's risky, right? That's one of the advantages, right? You can actually get, a nice sniper trade, because price sometimes will just tap into it and continue shooting up and never actually, give you a chance to enter the market. But remember, the goal and the key is to actually be profitable in the long run, right? That's what you want to do. Be profitable in the long run. All right, guys, if you learned something from this video, please leave a comment, leave a like for the YouTube algorithm. And also, if you are new here, don't forget to hit that subscribe button and turn on the notification bell icon to be the first to watch when we upload any new content. Also, check out our Telegram channel. Find the link in the description below.